You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
The trading day doesn't start when the opening bell rings. Pros understand that risk never sleeps, and market-moving events happen around the clock. How can you arm yourself with the information you need to understand what's going on across the pond and how it can impact your portfolio? Welcome to the European Market Brief, your go-to source for information on the fast-moving European derivatives markets. Each episode brings you expert insights into the latest market trends, discussions of cutting-edge trading strategies, breakdowns of exciting new products, and analysis of thought-provoking trading activity. The European Market Brief, brought to you by Eurex, is your trusted source for the latest insights on European trading and market trends. As the home of Euro stocks, B stocks, DAX, and European rates derivatives like the Bund, Bobble, and Schatz, Eurex stands as the leading European derivatives exchange. Learn more about trading Eurex futures and options at www.eurex.com. So join us as we shine a spotlight across the pond and explore the cross-border volatility, regulation, and innovation that makes the marketplace so fascinating. It's time to get the European Market Brief.
All right, everybody. That music means we are back. Time for episode 6. Hard to believe. Episode 6 already. Yes, episode 6 of one of the newest editions. Not even the newest edition. We've added a new show since. So network's been growing like crazy of late. But welcome to episode 6 of the European Market Brief. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the network, the aforementioned network that continues to grow. Thanks to all of you out there who've been enjoying not just the European Market Brief, but the latest edition, of course, the Hot Options Report, hitting you every day on the network with the latest data and activity. And of course, if you want even more, perhaps you want to come back a little bit later today to participate in a great pro Q&A session where we're going to talk about a wide variety of products, I guarantee you, including FX, going to go across the pond quite a bit with our buddy, Mr. Rich Excel. Then only one place to get that, theoptionsinsider.com/pro is the place to go to learn all about that. As we learn all about who's joining us on the European Market Brief, we got a stacked show for you today. And if I do say so myself, a very timely product category to get into. And joining me on the program today, first, he's holding off on going to a conference just to join us on the program. That's how committed he is to the show, listeners. Our old pal, the Joan Rivers to my Johnny Carson, none other than Mr. Russell Rhoads, now holding court over there at Indiana University. Mr. Rhoads, welcome back to the European Market Brief, sir.
Well, I do want an explanation on that. Joan Rivers is that I'm the only person that I think is allowed to substitute as a host for programs for you.
There's that.
That's until I go off and start my own program and we have a very, very public breakup.
A bitter feud that lasts for years. All right. And then also joining us, listeners, we have a trio of newcomers to the program and indeed to the network. We'll start off with Nicolae Raulet. He is the derivatives product development specialist over there at Eurex. Nicolae, welcome to the European Market Brief.
Thank you, Mark. Very happy to be here on the show and share some insights with the audience.
Really quickly, give us a little hint of your background as well as what you do over there at Eurex.
Yes, so I am in the product team at Eurex. I have been with Eurex for a little over 10 years now, mostly looking after equity and equity index products. So crypto is a new endeavor for Eurex and for me personally as well, where we embarked about 2 years ago. But more on that later.
All right, and next up, another newcomer to the program and indeed to the network. He is Shawn Creighton, the Director of Index Derivative Solutions over there at FTSE Russell. Shawn, welcome to the European Market Brief, sir.
Mark, thanks for having me. First time on the show, but I've listened to many of your shows, so pleasure to be on.
Oh, you're
Shawn
the one.
Creighton.
You're the one guy. You're that one download we see every week. That's you.
Yeah, exactly. Shawn Creighton. I look after the derivatives business at FTSE Russell. Been here for a little over 3 years. Prior to FTSE Russell, I worked for a large derivatives exchange for 12 years, a variety of positions across the globe, and really looking forward to today's conversation on digital assets, Mark.
And last but not least, our third newcomer on the program today, Sandra Brekalo, the Senior Principal Trader over there at Crypto Finance. Sandra, welcome to the European Market Brief.
Hi, everyone. Thank you, Mark, for such a warm welcome. And you pronounced my surname correctly.
Wow, I'm 2 for 2 on the show today. I'm crushing it.
Exactly. Thank you so much for having me. I'm really glad to be joining you guys today. So, as Mark mentioned, my name is Sandra Brekalo. I'm a senior principal trader at Crypto Finance, part of Deutsche Börse Group. I manage trading across both major and alternative crypto assets. I've been with the firm about 8 months, so relatively new to Switzerland as well. So before moving into crypto, my career was firmly rooted in traditional finance, primarily trading FX. So it's been very much exciting to bring the background into the space that's still evolving with fresh challenges and opportunities every day. So very much the case. So a bit about crypto finance. So we are, like I said, like Eurex, we're part of Deutsche Börse Group. We're one of the leading regulated institutions dedicated to digital assets, operating very much across 3 pillars, trading, custody, and staking, all very much built on our proprietary infrastructure in line with both Swiss and MiCA regulatory frameworks. And so at our core, we really serve institutional clients seeking secure, transparent, and efficient access to the crypto markets, whether through liquidity provision, regulated custody, or staking solutions.
There we go, listeners. And if you couldn't figure out from Sandra's title, yes, we're going to dive into crypto today. So without further ado, it is time for a continental conversation.
It's time to catch up with the thought leaders who are shaping the European derivatives markets. It's time to have Continental Conversations.
All right, listeners, let's dive into it. Like I mentioned, a very timely product category to have on the show this week. We are just coming off the heels of Crypto Week here in the US, so a lot of legislation coming to the fore in the crypto space here in the US, dealing with things like stable coins, but also some of the less sexy aspects of the space, the market infrastructure, the plumbing, if you will, all very important at the end of the day. Of course, new all-time highs for products like Bitcoin. So I think it's fair to say the crypto space right now hotter than it's been in quite some time. So perfect timing to delve into all things crypto. Nicolae, we'll start with you as our duly appointed product representative here on the show. I like to set the tone of the conversation so people listening predominantly here in the US, but there's a lot of listeners around the world as well, they know what they can sink their teeth into on the product side. So let's start there. When it comes to the crypto offerings at Eurex, what are we talking about? What can we trade over there?
Yeah, thank you, Mark. So as mentioned earlier, Eurex embarked on this journey, on the crypto journey about 2 years ago. And we started off with futures on Bitcoin, which obviously is as the largest cryptocurrency out there, is no doubt the most interesting as an underlying for derivatives. So we started off with futures with a contract size of 1 Bitcoin. Now, for anyone out there that has been familiar with equity or equity index futures, you set a contract size for those. So a very similar construction. In our case, we have a future that tracks the performance of the Bitcoin price. Now, as interesting as Bitcoin is, obviously there are other cryptocurrencies, specifically Ethereum, which is the second largest out there and attracts a lot of interest as well. So we quickly followed with futures on Ethereum and also adding at a later stage options on both Bitcoin and Ethereum. Now, important to say that these products are regulated both in Europe as well as in the US. They're CFTC approved, and that is I think an important milestone for us as an exchange to offer a trusted access to this space, which has been in the past quite often ripped apart by scandals or by defaults and breaches of security protocols. So I think it coincided roughly with the collapse of the FTX at the time when we listed the products, and it was we could say now with the benefit of hindsight, it was not a coincidence that we stepped into this space at the time where confidence was very low in this asset class, or was dropping. And now you spoke about all-time highs, and obviously Bitcoin now at over 120,000, or just about. I think I checked last; it was about 118,000. You quickly forget that when we listed the product about 2 years ago, it was just about $25,000 per Bitcoin. So in the crypto space, time passes fast. It's like a 10x on time, right? Like you can't possibly compare that to any other markets in the world. So that's what makes it probably most exciting. So yeah, in a nutshell, Eurex offers in its traditional exchange infrastructure and clearinghouse environment, it offers futures and options on Bitcoin and Ethereum, cash settled, that reference the price as calculated by our trusted partners. And we're very happy Shawn is on the show as well. So I'm sure he will dwell more on that.
Nicolae, I'm shocked that you would imply there are shady actors in the crypto space. Shocked and appalled to hear such things here on the show. Sandra, same question for you. Obviously, it's a hot time on the crypto product space. And also, as you mentioned, new all-time highs. So these products are getting a wee bit more expensive to trade. So as with most product categories, it seems like the trend these days is to make things smaller and more bite-sized. Are there any smaller, more bite-sized flavors that our listeners can look forward to?
I think just from my side, it's of course Eurex being a separate entity. I think the launch of the Eurex futures, I think it's a meaningful step in the evolution of, I would guess, in institutional grade crypto markets. I think it very much democratizes access to the futures trading by dramatically, maybe, I guess, lowering the capital barrier. And I guess you're talking about getting exposure to Bitcoin with under like $1,000 or on a fully regulated, centrally cleared venue. And I think that's very much very huge for retail and small institutions who want a price precision, hedging ability, or even just, I guess, cleaner access without having to necessarily custody the assets. So I think it's reshaping, and I think Eurex, introducing this, and I think is the step in the right direction. And I think this is something that's going to appeal and it is evolve going forward.
Well, Shawn, Nicolae mentioned there the underlying indexes that we're keying these off of. As always, in the crypto space, the devil is in the details. We've seen a lot of different approaches as to creating some sort of underlying index or benchmark that you can use to key a listed product off of. And that's exactly what we're talking about here. When we're talking about the Eurex products, they're, of course, keying off the FTSE Russell crypto benchmarks. So give our listeners a bit of an overview. What are we talking about here in terms of underlying? How do they work? What different outlets are you aggregating to come up with these prices for your benchmarks at the end of the day?
Thanks, Mark. Yeah, we're really happy to be partnering with Eurex in the digital asset space, and specifically on the single coins, Bitcoin and Ethereum. FTSE Russell is a global index provider. We've been doing this for quite some time and have indices that are benchmarked around the world. We're talking over 18, 19 trillion in assets benchmarked to our indexes. So, it's natural for us to get into this space and to really lead and demonstrate what we do best, which is index creation, but also very vetted and transparent and rigorous guardrails that are put in place on this index creation. So we've been in the digital asset space for quite some time now, and we started with the single asset indices and have expanded over time. We have a partner in the space, Digital Asset Research, or DAR. They help us with what we call our vetting criteria. So, Mark, for purposes of our listeners, we as FTSE Russell don't just take any prices out there. As you said, it's amazing that there are bad actors in crypto, but there are. So we have a rigorous vetting criteria, both on the exchange side and on the asset price side, and we partner with DAR to manage that and pull all of the data and put it through our checks. I think Nico brought up one specific exchange, and it would be very important for me to note. FTX was never part of the FTSE Russell exchanges that price our benchmarks. So clearly what we're doing works, right, Mark? We're rooting out these bad actors. But on a quarterly basis, we look at the participating exchanges that make up our index. The number varies from, call it 6 to 8 exchanges. And the exchanges can be part of the index if they pass all of our vetting criteria. It's the largest, most reputable exchanges that you would expect that are part of this index. And we constantly look at them on a quarterly basis. And what we're doing, Mark, is we're pulling pricing from these exchanges and we're putting them into our methodology, which is public. Anybody can see it. We're not hiding anything, and it's available on the website. And we come up with a price, a representative price of, in this case for Eurex, Bitcoin and Ethereum, and we publish that price to the market, and ultimately that's what Nico and the folks at Eurex are using to settle their products. We're very proud of the work we've done in this space. Mark, we set the same rigorous and governance policies that we do for flagship indices like the FTSE 100. And, we've been doing that for over 40 years. So we feel that, we are well equipped to withstand the ups and downs of this new market, right? There's things that are going to come up and things that are going to happen that, might worry some other newer index providers, but we've been around for a while. We've seen quite a bit. And, we have, the ability to kind of work through some of these items. And honestly, Mark, we're really open to working with partners and understand and really an open architect and understanding the dynamics of the space, because it's new for everyone, right? I mean, this space has really only been around, a little over a decade here, but mainstream, I would say, within the last, call it 5, 6, 7 years. So everyone's learning, and we want to make sure, as Nico said, that we are establishing trusted benchmarks that individuals can trade on, or put assets against, and ultimately that's what we're focused on, Mark.
And Mr. Rhoads, last but certainly not least, so you have a unique perspective on the crypto space, specifically on the options and futures side. You've been around for a launch or two over the years. You've seen this space kind of evolve and grow from its very, very nascent days when they launched really the first listed futures here in the US, and everyone thought it was going to destroy the Bitcoin market. Kind of did for a little while. Some people blame it for the onset of crypto winter, to the wide array of products that we have listed in the derivatives world today for crypto. What are your thoughts on everything we're talking about here today, sir, and specifically the need for the options and the futures, sir?
Yeah, people kind of know my background. I was with one of the exchanges in Chicago that was first to launch Bitcoin futures, and they actually delisted them. I think one of the big issues with that one was something that Eurex is definitely avoided, which was the pricing. The SIBO ones would settle into one quote, from one exchange, from one market. Yes, Mark. Okay, so those would, and so I think there's a lot more integrity with the pricing issue around what Eurex is doing. But as far as usage goes, when I was involved in that launch, I had to go on a road show for about 3 weeks, and the majority of people that showed up for the road show, and it was very targeted toward professionals, were miners trying to figure out how to offset their risk. And that is, I mean, that's how futures got started in Chicago back in the 1800s. Farmers had a pretty good idea as to how much wheat they were going to have. They tried to lock in that price before growing season, and then they, would come back, and they already knew what they were going to get for their crops, and they could run their business that way. If you're a Bitcoin miner, you generally have a pretty good idea as to how much you're going to be able to mine, what the cost of the mining is going to be, and there are opportunities using futures contracts to lock in the price that you would basically be selling the Bitcoin that you mined in the future. So I think having the futures out there, everybody likes to think of crypto as just being purely speculative. There is a whole business behind crypto. And to have a successful listed derivative product, you need to have hedgers, you need to have speculators and liquidity providers. I always worried, where were the hedgers going to come from? And then when I did that first roadshow, seeing all those miners show up because they finally had a way to mine with a bit more certainty, it really encouraged me with respect to having listed products based on the crypto space.
Well, let's get into that space a little bit right now. As I mentioned at the top of the show, this is a hot time to be talking about all things crypto. Bitcoin blowing past 120,000 for the first time. Ethereum on the run of ages, at least for right now. It's been a very, very troubled asset, to put it mildly, over the last year and a half and over the last month and a half, making up for a lot of lost time. In fact, gaining back all of its losses for the year so far, actually turning positive on the year, which a lot of people didn't think was possible. Solana, a lot of other major crypto assets on wild runs as well. So let's start there. Let's go around the horn. Mr. Rhoads, sir, obviously it's kind of a wild time in the crypto markets. What are your thoughts? Bitcoin, new all-time highs, ETH on the rampage again for the first time in a long time. Solana, what is catching your eye, sir?
One thing with respect to ETH versus Bitcoin, I can remember years ago that there's always these "it's not if but when" conversations, and because of the flexibility around the Ethereum network, there was always a feeling that the market cap of Ethereum would top that of Bitcoin at some point. It's gone the opposite direction. In fact, I think. The market cap of Ethereum is around 450 billion, and Bitcoin's at about 2.4 trillion right now. Those numbers were a lot closer over the past few years, and they definitely widened out this year with Bitcoin up 27% and Ethereum up 11%. But there is some potential catching up for Ethereum to do. And I mentioned this is not a trading recommendation. It's just something that can be done easily in the listed derivative market. But if you have a feeling that Ethereum's going to catch up, or you think that it's caught up too much, they're going to spread back out, I can't think of a better place to speculate on that outlook than the crypto futures at the same exchange, where you can watch the pricing side by side.
Sandra, same question for you. This is obviously a wild time in the broad crypto space for all the reasons I just laid down, as well as many more. What is catching your eye from a broad macro perspective out there in the crypto market right now?
Well, Mark, I think we're in a very much sweet spot for markets. Growth is sort of decelerating without much of a falling off the edge of a cliff, and inflation isn't causing too much of a panic, and liquidity is on the rise. We had the CPI out of the US last week, and it was just right. not too hot, not too cold, supporting the view that rate cuts and the Fed have remained firmly on the table towards the end of part of this year. And meanwhile, retail sales have bounced, really much reinforcing the picture that of a still resilient consumer. That's created, I would say, very much a powerful backdrop for risk, so to speak. Equities are breaking records, as we can see over the past couple of weeks. Crypto is charging higher, and capital is very much redeployed aggressively. And the Trump administration has also shown surprising flexibility on the trade, which is helping to calm some of the geopolitical jitters. But I'm always of the opinion that the Trump's playbook in terms of the tariff side has always been a negotiation tactic, and that's very much sort of been the case. But let's see how this plays out. There is an imminent deadline, 1st of August, on some of the emerging tariffs on the trading partners. So, and also we've had the issue with Jerome Powell's job security in the question, and the Fed independence. So these have sparked some market noise, so to speak. So we had some knee-jerk sell-offs, but quickly came back up. It's been more about political pressure than any real threat on the Fed side of things. So if anything, it highlights why Bitcoin mattered. Its rules aren't subject to shifting political winds or policy whims. So that's exactly why it makes it such a compelling sort of macro hedge, and why I think it continue to outperform at both ends of the tail, so to speak. So, and also, you spoke right at the beginning in terms of a huge week, crypto in the US. It's been a huge win for crypto regulation with the signing of the Genius Act. Stablecoins now have a path to legitimacy, and Ethereum, of course, we've spoken about its strong performance, is the main settlement layer and stands to benefit the most, which is what I think is part of the driving factor in terms of getting ETH to the levels we're seeing right now. So it's really kind of helping to explain its performance, especially on the ETH-BTC ratio, which is continuing to break out. So in this sort of environment where extremes are driving returns, I think, for me, Bitcoin stands out as the asymmetric sort of bet that works whether things break or boom. And I think is the ultimate dual play asset, resilient in crisis and explosive in euphoria, so to speak. So it's been a very interesting sort of week. In terms of a broader macro, and I think it just really means that this kind of sort of continues. But I would actually sort of take a step back in terms of we spoke about the all-time highs as well here. Bitcoin and Ethereum have really sort of recently, ever since the ETF approvals, have really established themselves as institutional grade assets. This has really been driven by the ETF inflows, treasury allocations, and deeper integration into the traditional finance infrastructure, so to speak. So they're not behaving more like a macro asset, less about hype, more about structure and sort of long-term positioning. Ethereum, as we of course mentioned, is seeing a very much a meaningful shift. As I mentioned, the recently signed Genius Act, and also the corporate treasuries are actively building ETH stockpile. So very much reviewing as a core reserve asset with programmability and potential yield, much like Bitcoin has been for entities such as MicroStrategy and MetaPlanet, which continue to accumulate a Bitcoin at a very large scale. So, and we've seen option markets reflect the shift in ETH bullishness. The call spreads are being bought into the end of Q4, and the risk of Russell deeply into the positive territory. So I think really kind of the positioning speaks to institutional confidence in potential further upside in Ethereum. So now separately to that, so I think rather than in terms of the all-time high, I think we're still very much quite below that. I think Ethereum highs are just over 4,800. So we have some room to chop to get up there. It's been unloved, but it's under-owned. So I do think, given the inflow, I think we had about record inflow of ETFs last week, about 2.1 billion, and there was a couple of days which surpassed Bitcoin ETH flow. So that really kind of speaks to sort of rotation into ETH. Reflecting confidence, and let's see if this momentum continues, because I do think it's not a question of if, it's when do we break the all-time high in Ethereum.
Well, I think that'll be music to the ears of a lot of our live listeners right now. They're all chiming in our live asking all about ETH. So clearly the sentiment has shifted to the world of ETH, which if you had told me that even a month and a half ago, I would have said you were crazy, when ETH was literally the worst performing asset that we tracked so far this year on our futures rundown program. And yet here we are a month and a half, 2 months later, and how the worm has turned. Maybe going back to what Russell said earlier, maybe the flippening is in the offing again. We got a long ways to go towards that, but it's at least a chance for some optimism. Nicolae, as our designated product guy here on the show today, we've had a crypto show on our network for a long time, and we've attempted for most of that time, over half a decade, to come to grips with this notion of institutional demand, as Sandra was just talking about, for crypto. What is it? How strong is it? Where is it coming from? At the end of the day, I've often on that show only kind of half joked that at the end of the day, you can break down institutional demand for crypto into where is Bitcoin trading. And if it's at new all-time highs, institutions are excited. If it's at the depths of crypto winter, maybe not so much. So it's a half joke. Maybe it's a little bit reductive, but I think there might be some truth to that. So I'm wondering your thoughts on that. Just the price level for Bitcoin as a gauge for institutional sentiment. Do you agree with that, yes or no? And then B, obviously you're in the listed derivatives world. There's a lot of back and forth between the need for centrally cleared listed products and all the benefits therein, regulation, oversight, and everything else like that, and a lot of the, shall we say, crypto natives who kind of lean towards the DeFi world. How do you strike that balance coming from the exchange world and navigate and hopefully try to lure some of these crypto natives to the light side, shall we say, of centrally cleared products? A lot to unpack there, Nicolae. Take it however you like.
Yeah, thanks, Mark. So I think the definition of institutional investors is probably a bit broader in how we see it here at Eurex. In the crypto space, institutions have been present a lot sooner than anyone thinks of it, right? And we just have to make it to differentiate a little bit between what people often think as maybe pension funds or some asset managers that offer some investment products to outside money, or perhaps some more sophisticated institutions like hedge funds that obviously are a little bit more agile in what products they and what markets they decide to invest in. And one of the most one of the biggest breakthrough into allowing more institutions to join, especially a lot of those who are a bit more bound by marketplaces that they can access or the type of products that they can access. Of course, products like ETFs and listed derivatives on traditional exchanges have broadened that access to these institutions. How many of them are really allowed to invest directly as in buy spot crypto and hold it as part of their allocations? I would be a bit skeptical. I don't think there's too many institutions out there in the traditional sense that can do that. Hence, this type of indirect investments are so popular, and for most part, they're very cost effective as well. If you try to break down, the cost of opening accounts on multiple crypto spot exchanges, obviously a lot of them in different jurisdictions, and you need to maintain inventory on all these different exchanges, and you need to take into account all the different trading fees and so on. It can be very, very expensive. Obviously, a product in the traditional space like an ETF or a listed futures is very transparent. Eurex has a very clear trading fee, which is in line with other equity and index products, and it's very easy to make a decision by an institution. So it will only, I think the current price level does not really reflect the full potential of traditional asset managers and pension funds out there. I think the other thing that is changing is you see more and more often allocations to cryptocurrencies, especially to Bitcoin, or let's say more specifically to Bitcoin, and in some instances to other cryptocurrencies. Such allocations are being recommended to portfolio managers. So I think that's something new, and it will shift perception and will shift demand for products. I think Eurex is very much a sort of a customer-driven exchange, where we have demand from our investors, from our clients. We act on it, and we list those products, and we make changes to make those products useful. Help me out there, Mark. Is that answering both parts of your question, or am I missing?
No, yeah, I threw a lot at you, so you tackled most of it admirably. Shawn, same questions for you. Again, I'm only half joking when I talk about whenever Bitcoin makes new highs, all of a sudden the institutions seem to care again. But I'm curious about your thoughts, as that is kind of a rule of thumb, a back of the napkin benchmark, if you will, on a gauge for institutional demand. And then B, what are your thoughts? I mean, you live in the listed product world as well. It's especially challenging when you're talking about crypto, because you have so many people who are crypto native who came to it specifically because they don't want to deal with any sort of centralized authority anymore. And now we're trying to lure them back to that with listed crypto products. So how do you navigate that divide and that balance over there at FTSE Russell, sir?
Yeah, Mark, I think I know you're half joking, but I compare it to like the rates market. No one wants to talk to you when rates are at zero, and then rates started moving, and all of a sudden, people want to talk to you.
We didn't talk rates for the better part of the last decade until the last couple of years on the network. So yes.
So I look at crypto a lot the same, Mark, in which no one wants to talk to you about digital assets when we're at the lows and in the quote unquote crypto winter. But now that crypto is on the move, and we're going to the moon or whatever it might be, crypto is front of mind for everybody. So look, us as a leading index provider in the space, we really work with participants to build indices that are representative for what they are looking to do. So what I mean by that is, in the case of the listed derivative space specifically, the areas that I look after, we have your standard indices that are based on the price of Bitcoin, Ethereum, and then we've worked with exchanges to launch indices that would be 1/10 to where we would do the kind of calculation on our side and create an index off of that. So what are these bite-sized products I think you referred to, Mark? So we're doing that on the indexing side as well. But then going back to your question on institutional, we have a great partner in Grayscale in which we create sector indices, right? And I would think, sector indices to me is more targeted towards an institutional client base that is looking at sector exposure and not so much concerned about the movement of, a single asset. We're also working with participants on something called staking, which I'm not sure if your listeners are familiar, but staking on Ethereum is something very interesting, in which you could potentially trade the yield component of Ethereum, or the total return, both the yield and the asset price. And these more complex products, to me, naturally lend themselves to institutional players. And I think that's where we'll continue to develop, and things will get more interesting. But I think one important part we've hinted a little bit throughout this podcast is the regulatory uncertainty, or maybe there is some regulatory certainty coming, in which some of these products will come to market, and we'll see some more institutional adoption. So I would just wrap up in that we're building products, Mark, that are fit both for institutional and retail, and we're ultimately going to continue to adapt and move with how regulatory landscapes evolve, and that's what we're most concerned with.
All right, a lot to unpack there. I want to get to the regulatory stuff in a second. You also mentioned staking. I think we have a listener question about that. You're right. Staking is very much a big part of the ETH ecosystem in particular. Speaking of ETH and just altcoins in general, really quickly, Mr. Rhoads, because when you got into this game back in your days at the SIBO, it was all Bitcoin all the time. It's all anybody could talk about. That's where all the interest was. These days, the ecosystem has evolved. Chances are on our crypto programming, our guests and our listeners want to talk about altcoin more than Bitcoin a lot these days, including some very esoteric products that sometimes aren't on the radar of most of the rest of the folks out there. What are your thoughts on that kind of evolution we've seen in the space from your early forays where it was all Bitcoin all the time to now it seems like in many ways altcoin are leading the dance, sir?
Well, when I'll go back to that roadshow because an awful lot. I mean, those 3 weeks that I spent doing nothing but going around the world, talking about Bitcoin, how the futures contracts, et cetera. While we were on that roadshow, about 3 or 4 days in, there was a big article that came out about Ethereum and how the technology was better. We actually started, which is kind of funny because of the people I was on the roadshow with, but we started referring to Bitcoin as MySpace and Ethereum as Facebook. The flexibility, et cetera. Now, this is not how things played out, and we're talking about well over a decade ago. But when we started the roadshow, it was all about how Bitcoin could facilitate transactions more quickly, et cetera. By the end of the roadshow, it was more of a concentration on Bitcoin as a store of wealth and Ethereum being the one that you want to use for transactions. So when we talk about how quickly things change in this space, it wasn't the evolution over a decade, it was the evolution over 3 weeks. One thing with respect to, you said the chat's all over Ethereum right now. I like to use Google Trends because I feel like sometimes all of us are a lot closer to the markets than most people. And it does take widespread demand really to start pushing prices around, or widespread supply. At the beginning of the month, the Google Trend score for Ethereum was 18, and it was 82 for Bitcoin. Right now, it's 42 it's 98 for Ethereum and 82 for Bitcoin. And it's kind of coincided with the price. I think it's like a FOMO thing that seems to be going on, where people are like, "Oh, this thing's starting to behave better than Bitcoin," and searching for it in a general search space. But you can see that in the fundamentals for these things sometimes can be difficult to measure. I've found that when you have markets like that are a bit more emotionally driven, and I do think crypto to a certain point is emotionally driven, looking at those numbers will give you a lot of insight. And I was really surprised to see how low Ethereum was at the beginning of the month, but how much it's climbed. Got to be a function of people tuning in to see the price.
Look at you coming armed with Google Trends data. This is why I know when I toss to you, you're always armed with some interesting factoid or two over there, Mr. Rhoads. But you mentioned the regulatory side. I suppose we have to get to that. It's kind of difficult to discuss crypto without talking about the other side of it, which is regulation. Usually not the sexiest of topics, but this past week, I think people saw a clear correlation with more regulation, better regulation, at least here in the US, and new all-time highs in a lot of the products they like to see. So maybe they'll correlate one with the other and maybe be more interested in both as a result. Of course, we had a crypto week, like I mentioned, here in the US. Genius Act, as Sandra was talking about earlier, kind of paving the way for a little bit more clarity on the stable coin front. As one of our guests on the Crypto Rundown pointed out yesterday, also had a lot more developments that are probably less sexy on the plumbing and market infrastructure side, but for the long term could be much more meaningful and impactful for the crypto market going forward. So a lot of big changes on the US side, but of course this show is focused across the pond. So maybe Sandra, we'll start with you. The regulatory side and crypto, they are inextricably linked. You can't really discuss one without the other. We had a lot of evolution in the US side over this past week. What kind of evolution are we seeing in Europe, and maybe what are you looking forward to and hoping to come down the pike in Europe to maybe help foster the crypto market going forward?
Thank you, Mark. Yes, hand in hand in terms of regulation in crypto, and just in terms of the regulation itself, and in terms of what we sort of believe are sort of necessary kind of first things in crypto, especially on the regulatory side, I would say clarity, custody, and capital treatment. I would say the trifecta when it comes to when we look towards enabling further institutional adoption and allowing the sort of the regulatory landscape to pave the way for that. So MiCA in Europe was a meaningful step forward, but the real breakthrough, I think, will be harmonized implementation across the member states in Europe. So this is what I'm kind of looking at. So this includes, I think, consistency in disclosures, passporting, especially custody standards. So globally, we need an alignment, I would say, on several fronts: standardized reporting obligations, or a clearer capital treatment of tokenized assets, and purpose-built frameworks for stablecoins and, say, DeFi protocols. So these are the areas, I think, where regulatory uncertainty continues to hold institutions back. And I think there is some room for improvement there. So I think this is why something like the recently approved Genius Act in the US is very much important, and is a great thing to have. So it does provide a very much formal regulatory framework for stablecoin issuance, which is very much a cornerstone for everything from on-chain payments to real-world asset tokenization. So regulatory clarity at the level is not only reduces risk, I think it looks participation from corporates, treasuries, and institutional allocators who were previously, I would say, sitting on the sidelines. So we've already seen how fast institutional engagement can scale once the rules are clear. So whether it's spot ETFs, token, or structured products, I think demand is there. I think regulation just needs to meet it with the right infrastructure. So on the Europe side, I'm really looking for the standardization across the member states, and let's see where we go from there.
Let's see, indeed. Nicolae, same question for you, sir. Obviously, the regulatory side ever evolving. We saw some large scale evolution here in the US. People are now looking across the pond to see what Europe has up its sleeve. What are your thoughts on the European regulatory side and what it might mean for the listed crypto market going forward, sir?
Yes, so I would probably focus a little bit on, on one hand, the specific laws and regulations that affect crypto assets directly, and of course the different regulatory regimes that apply to companies offering access to such products or offering services in this space. And I think what is important out there from our perspective, no matter what bill comes out there, Eurex is sort of at the highest regulatory standard in the MiFIR framework, and I think that's quite important for our customers who look into this space, right? They appreciate, obviously, developments like MiCA and other initiatives here in Europe, which are quite important for operators of the cryptocurrency directly or offering services in stable coins and so on. But as far as it goes for derivatives and having the strictest possible governance rules around accessing and offering these products, I think Eurex is already up there applying all of the strictest rules that apply in traditional markets. They're no different when it comes to cryptocurrencies. So that would be my take on it. Now, of course, fortunately, we have other experts today that already gave a bit of a take on what is happening out there globally and also specifically in Europe. But yeah, I think that my main sort of if I want listeners to remember one thing about regulatory environment in Europe is that Eurex already complies with the strictest possible rules when accessing our products.
All right, we are already coming up against it. Hard to believe. An episode flies by when we're talking all things crypto fun. But before we roll out of the continental conversations, I want to give everyone a chance to kind of look forward a little bit, look ahead, and maybe leave our listeners with some daring and dare I say it, bold predictions or insights or outlook for the future. It could come and any different sector, maybe some hot products you're keeping an eye on, you think they're going to come on the radar going forward. Maybe if you want to get wild, you want to talk some price action in whatever, Bitcoin or ETH or whatever floats your boat, or it could be any sort of upcoming developments you want people to keep an eye on. Either way, have at it. The floor is yours. We'll start with you, Mr. Shawn.
I'll stay away from predicting what the price of Ethereum or Bitcoin will be because.
Why would you want to stay away from that, sir? I have no idea.
Yeah, I have no idea at this point. Maybe I'll leave that to Russell. I hear him laughing. He's got better insights.
Oh, I'm not doing that.
Yeah. But look, Mark, what am I excited about? What do I see here? Look, I think we're just scratching the surface in digital assets. I really do believe that when we look at how the asset class is developing, we spent a lot of time today just talking really about two single coin assets, Bitcoin and Ethereum, but there is many other single coins out there. Let's put meme coins aside for a second and just park those. But there's things that we can do around baskets, right? Trading baskets of digital assets. We touched on staking a little bit. That becomes really interesting, where you could trade a yield component as well as a total return with the price of Ethereum. We look at momentum strategies that potentially could be developed. We look at combining digital assets with traditional assets. Like, could we imagine trading Bitcoin against the Russell 2000 as a combined index, right? So these are the things that get me sectors and thematics and all these things that we really aren't even scratching the surface yet. But this is what gets me most excited and what I'm looking forward to as this asset class continues to develop.
Russell, same question for you, and I will hold your feet to the fire. We need a specific price prediction for Bitcoin in 6 weeks ago.
You know for a fact that I'm not somebody you want to get a Bitcoin price prediction from our years together. But I would say, I do think that Ethereum is coming back in favor. And I do think that the performance difference between the two is probably going to narrow a bit. At some point, you also you got Bitcoin, and I worry a bit about some of the liquidity when you get something up around $3 trillion or so, with respect to how much I don't know how much more upside can you get from it. Seems like a lot more flexibility around Ethereum. Again, I'm definitely not the IT expert on this one, but my understanding is that there is a lot more flexibility around the Ethereum network than the Bitcoin network. At some point, that might provide a boost. I'm not going to go out on. I don't think within our lifetime now that Ethereum will overtake Bitcoin as far as market cap goes. So I have just basically said something that will cause Ethereum to become bigger than Bitcoin.
I was gonna say, you just outraged all the ETH heads out there, sir.
I know. So that you don't talk about this, and you don't talk about Tesla. There you go.
There you go.
You upset the world.
We'll add that to the list. Sandra, same question for you. If you have any daring or bold predictions you want to share, or any outlook for the space, or maybe some products people should keep an eye on, now is the time, madam. The floor is yours.
Of course I do. Well, I did start a year with a very bold prediction of a range in Bitcoin, and that was towards 180,000. Seems very bold now, come to think of it.
That is very bold.
Yes, but Ethereum wasn't in play, but I do think, as Russ alluded to, it's coming in back in favor. And I mentioned all the factors and catalysts that are helping to propel ETH towards its all-time high. And I do think, as I said, it's not a question of if, it's a question of when. And really thinking about, I think people need to stop and think in terms of where we are in terms of the cycle. We are in summer period. There's a lot of market participants on summer holiday. They're not playing along, and the Fed hasn't started to cut. And so the global liquidity is set to rise, and I do think this will help to have. I think the second half of the year will be quite strong for crypto, and I do think we're looking at those targets. I would say definitely for me a range of 150 to 180 on Bitcoin, and I think Ethereum. I don't think like $6,000. Definitely north of its all-time high. About 5,000. It's completely out of question. So I hope I'm trying to keep it very short for you, but happy to expand. So yeah, those are kind of my projections.
I think you said it all right there. I don't think anyone really, you're right, had ETH on their bingo card about a month and a half ago. So
yes.
That alone has been quite the shock. I see you looking in our live chat. They've been joking forever about Shiba Inu Lamborghinis, and now they've added ETH Ferraris to their list. So there we go. That just shows you the change in outlook for all things altcoin just in the last month and a half. Nicolae, you get the last word, at least for this segment, sir. As you're looking ahead, anything you think folks should be keeping an eye on, trends, developments, products, whatever the heck it is, the floor is yours, sir.
One big theme we haven't touched upon is obviously AI and how will that impact the cryptocurrency space. I mean, let's remember, a lot of it is driven by applications on all these different layer 1 and layer 2 and interoperability of different networks. And I think AI will have a significant impact on how a lot of these networks are run. So, Bitcoin, no question. I think this is effectively now seen as the digital gold with its limited supply and, dropping in realized volatility. Nevertheless, I would definitely spend some time looking further down the list. It's a very, very, interesting exercise, even without necessarily investing in any of these projects, but just trying to understand what people are doing is very exciting.
All right, listeners, we are up against it, but I promise on the last show we try to squeeze at least one of you in for some listener questions. You've been very patient. So without further ado, we'll have a real quick red phone segment.
What's on your mind as you're navigating the wild world of European derivatives? Let's find out as we answer the red phone.
All right, everybody, welcome to the red phone. We don't have time as much as I want to get to this segment, but we appreciate all of you folks listening and engaging with the show and sending in your feedback all the time. We love you all out there, even if you don't get a chance to answer all of you here on the show. But this one in particular dovetails, I should say, exactly with what Shawn was just talking about a little while ago on the staking front. This question comes in from AMAC87. He or she wants to know, do the listed ETH products offer access to staking rewards as well? That is a big part of the return stream for ETH holders. Thanks. Well, Shawn, you were just talking about this, and as I mentioned, it's difficult to extricate ETH from the staking side of it. For many people, that is a part of the return analysis that they do, and if you don't offer that, you're missing a big part of the return in the ETH spectrum in particular. So, Shawn, what do you have to say here for our listener, AMAC87? They want to know about ETH staking rewards, sir.
AMAC87, great question. So in the US, we're still only able to provide spot exposures to Bitcoin and Ethereum, similar across the pond. There are indications that staking will be allowed in ETH spot ETFs, and I think that would be the real first step to staking becoming commonplace, in crypto exposure products. And then, ultimately, perhaps we see Ethereum staking introduced in futures products. Because, as I said, it could be stripped out as just the yield component, or it could be combined for total return exposure. So, once the staking is more widespread, you can actually build yield strategies out of this. So, as it stands today, the products that you're seeing listed on exchanges are just the price returns. And there's not actually a staking product available to where you can actually strip out and trade the yield or the price return for a total return products. But hopefully coming soon.
Yeah, it sounds like your research team is working on that. So hopefully down the road we'll have some clarity on the regulatory front and we can get that. But great question, AMAC87. Thanks to everyone else who took the time to write in. All right, that music means we are out of time for yet another episode of the European Market Brief. Man, time flies when you're having fun and talking crypto. But before we go, let's go around the horn. Nicolae, we will start with you, sir. If folks are intrigued about these products and they want to learn more, where should they go? What should they do?
Yeah, great question. We're working closely with most retail brokers out there, the ones over in Europe have been a little bit quicker to put the product out on their platform when it comes to nano futures. But my advice would be get in touch with your favorite retail broker, the one where you trust most. We're probably linked with them as well, and that will speed up the product on the platform.
There you go. And of course, if you want to learn more about the product specifically, just head on over to Eurex.com, EUREX.com. That'll get you all the info, the contract specs, and answer a lot of the questions you might have as well over there. Speaking of questions, Sandra, same question for you. If folks want to learn more about crypto finance, or maybe you want to leave them with any last parting thoughts on the space, now is the time, madam. The floor is yours.
On the space, first of all, crypto finance, you can find us at crypto-finance.com. We are, as I said, part of Deutsche Börse Group, like Eurex, so we're part of that entity. Just lasting thoughts, crypto never sleeps. I thought when I was in FX for several years that this was a very much volatile and highly dynamic environment. Then I joined the dark world, and I have to say it's the next level, right? And I think it's just every day so interesting, and there's new projects, and it continues to innovate and keep you on your toes. But I do think we've come out of the sort of the era where, the credibility of the crypto was so low, and I think, when you used to maybe try to buy Bitcoin with your card, used to get declined because of the perception at that time from the, of course, the banking world itself, and many naysayers in the space are not willing to sort of participate in the space, just given the scandals. I think Nico alluded to FTX and everything, which wasn't really good for the crypto space. But I think we've come a long way ever since the ETF sort of the approvals. We've seen such an increasing adoption, institutional space, and more confidence, more credibility, and it's really so astonishing that we've just surpassed the $4 trillion mark was last week in terms of the size of this space. So it's just, to me, it's if the likes of many banks out there who were not once willing to offer this sort of asset class to the clients is having to sort of move into the space. It's a bit like AI. If you can't sort of if you can't really ignore it, the demand is there, and if you're not willing to sort of compete or offer that, then you're sort of falling behind. And I think it really speaks to the size of the market, and where we've come in such a sort of short space of time. I would say in the last 3 years, it's just been 2-3 years. It's just been so crazy, and I think we have so much to go. And I think I'm very excited for the future. So yeah, watch this space.
It is a very exciting time in the world of crypto. Shawn, same question for you, sir. If folks want to learn more about all these benchmarks and indices we're talking about, where should they go? What should they do?
Mark, thanks again for having me. FTSERussell.com. Just go under digital assets. We have all of our methodology is public. You can see how we construct these indices. We have white papers, research reports, lots of great material out there. So head to FTSERussell.com, search digital assets.
There you go, FTSERussell.com, the place to begin your journey to the dark side of all things crypto. And last but not least, Mr. Rhoads, if folks want to check out any analysis you're working on right now, where should they go? What should they do, sir?
Anything I do, I put up on Twitter. I probably don't tweet enough. But anything that I don't want things to get lost in the noise. I've been putting up some videos with another professor here at Kelly, and we do have the diversification benefits of Bitcoin and Ethereum in the can. We actually we compared it to holding a European portfolio with a couple of Eurex indexes, as well as what I've done in the United States before with combining it with a holding in the S&P 500. So you find out how Bitcoin and Ethereum can diversify an equity portfolio that's kind of tracking the Euro Stocks 50 is something that will be coming out within the next couple of weeks.
All right, fascinating stuff. Keep an eye on him. You know how to spell it by now, listeners. 2 S's, 2 L's, Rhoads, all one word on your favorite platform like Twitter. And indeed, it's out there on Substack as well. Keep an eye out for it. That is going to do it for us on the European Market Brief. Not going to do it for us on the network today. If you are hanging out in the Pro listening live, we will be back at 1 p.m. Central with our good buddy, Mr. Rich Excel, which we'll have to get on this program. He talks a lot about the European side as well. He'll be tackling all your questions about everything from FX to, I'm sure, crypto will be on there in some capacity, vol, equities, metals, you name it. We're going to do quite the product tour. So if you have questions, start getting them in now. I know a lot of you already have. That will be at 1 p.m. Central, exclusively for the folks on our Pro side. If you want to check that out for yourselves, theoptionsinsider.com/pro. Then we're back again throughout the rest of the week with our usual array of content till we're back again with the next episode of the European Market Brief. Stay safe out there, everybody.
The European Market Brief, brought to you by Eurex, is your trusted source for the latest insights on European trading and market trends. As the home of Euro stocks, B stocks, DAX, and European rates derivatives like the Bund, Bobble, and Schatz, Eurex stands as the leading European derivatives exchange. Learn more about trading Eurex futures and options at www.eurex.com.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.